everyone, my name is Pedro Nunes. I am an etoro popular investor, and this is my monthly video which I call Investment Dossier, where I make a present moment analysis of the market conditions and also speak about anything related with my portfolio that I consider important. I will begin with the posts that I make on the eToro feed. The name of the post is Why Warren Buffett is Always Long. I have at the present moment a perspective that most of the portfolio, although it should be diversified, it should have a long position, and the long position is a position that it's betting on the increase of the price of the assets. If we see Warren Buffett has this kind of strategy, and one of the reasons this strategy is very consistent in the long term, it's because 70% of the time the markets go up. If we have this long perspective, we should benefit from this secular move. And the second reason, it's because many people consider Warren Buffett, Howard Marks, that timing the market it's very difficult or almost impossible. And if we look at the present moment, if we look at what happened in January, there was a big increase in the main indices, namely the S&P 500. And if we look, we couldn't identify a real reason for this. So, like these names that I've referred used to say, we must privilege time in the market instead of timing the market. The more I learn, the more I think about these things, I think that in the downturns, instead of changing completely the portfolio, we should add positions in terms of good companies and the opportunity of buying good companies at a very attractive price. The second thing I want to talk about is in the eToro platform, the commissions and the spreads are very attractive, but they are different if we are looking at CFDs and if we are looking at real stocks or real ETFs. So in the past, I made some changes and I changed from CFDs to real ETFs. And I'm going to give you some examples. One of them is the most common ETF of the S&P 500, the SPY. And there is a SPY 5, which is a real ETF in the European Union, which we call a UCITS ETF. And we also have for the Nasdaq index, the QQQ ETF, which is a CFD, but we have the CNDX, which is a real ETF, all with the UCITS parameter. And over the last months, mainly in this month, I'm trying to convert all of the CFD positions in real ETFs or real stocks. Also because since the beginning of the year, eToro changed the policy in terms of the balance for the eToro tiers. And if we have a position in a CFD, it doesn't allow us to reach a certain position in the tiers, and these tiers are important for certain benefits that eToro gives, and you can check them on the eToro platform. Because of these two reasons, and maybe the most important is the first one, because the commissions, although are always not very high, with real assets they are better, so we must always try to invest with the lowest commissions possible. I remove all of the CFD positions. At this moment, my cash reserve, because I couldn't match all of them, examples that I gave, there are the same assets, the SPY and the SPY 5, but in other cases, I couldn't find the equivalent real ETF. So I'm working on that, and the cash reserve increased a little bit, which I consider at the present moment is not bad because the last months were very positive. So a higher cash reserve is not bad. But under the present conditions, I'm studying and I'm considering a lot of new, some of new positions. Of course, I don't want, and I've referred this in the past, I don't want to increase a lot the number of assets. When I open new positions, most of the time I try to close another one. I don't want more than 35, 40 positions in the portfolio. And I have a principle of not adding a new position in terms of number of positions. And I'm studying the best way to decrease the cash reserve. I have done that in the last couple of days, so the cash reserve is now less than 2 days ago, but I will try it to reduce even further because I think that we can see another downturn, but after a year of bear market, it's definitely the time to put our portfolio in place for the long term and for the future. I hope to see you again in the next investment dossier in March.